It's Legacy Thursday here once again over at Brave New Coin. Let's take a look at some stonks and memes and such. Start with the VIX, the volatility index, the DXY correlation, the gold correlation, the SPX correlation, and the NASDAQ correlation. Interesting that we've basically lost correlations with SPX and NASDAQ almost completely. Those continue to moon to infinity. A bit problematic that we aren't correlating with anything right now. We're not correlating with risk on stuff. We're inversely correlated with gold, and we're mildly correlating positive with DXY. VIX continues to drop to multi-month lows, which is and should be bullish for crypto. Again, if we're risk on, dropping VIX should be bullish for us, as it has been historically. A rising VIX is extremely bearish for us. So we've kind of lost all the common sense correlations and are just dropping like a stone along with hash rate. That's never a good sign. Long term, we want to be not correlated, but when we're nonsensically uncorrelated, that's a bit concerning. DXY looks more and more bullish by the day. It's great for the people holding lots of dollars, even though we're printing tons of dollars ourselves. This is an index. It's relative to mainly the euro. So it's important to keep in mind, fundamentally, the purchasing power is not what you're seeing here. You're seeing value relative to other stuff. And if this plays out TA-wise, it's headed to 96, 97, 98, which should be extremely bearish for crypto. We probably would see a drop to 20k BTC, devastation for DeFi. If rates follow that, if rates go up, you're going to see people flee away from DeFi, away from those yields that everybody is chasing, and it's just going to be a vacuum sucking all the liquidity out of the room. Stable coins are going to start burning instead of minting. That's something else to watch for if DXY and rates continue to go up. Here's Coinbase, which the falling wedge played out. The 1 hour Kumo breakout played out. So now it's got some cushion here at 230 as far as support based on volume. Still not a lot of chart history here, but it's finally done something other than dump straight down from listing. DiDi, the Chinese Uber, went public this week. Donut, DNUT, Krispy Kreme went public this week. Both of which I think sold off pretty decently as well. So this isn't like a Coinbase thing. This is just generally how this stuff kind of works. In the early days, people who have tons of shares locked up are happy to sell at any price. GME on the hourly, I don't really look at GME often on low time frames, but I was flipping through it and saw this multi-day bull div with inverted head and shoulders type stuff, edge to edge type stuff. This could play out to 280. Almost looks good enough for me to actually play as a technical thing, but on like high time frames, it doesn't look great. It's below the club. The more we're in fantasy land with Doge and GME and AMC and BBBY and all this other junk, the more we probably just continue to chop around in crypto, because this is going to hold everyone's attention. The young and old, the rich, the poor, the institutional, the Main Street, the Robin Hooder, the hedge fund Chad, all of them are going to be watching this instead of crypto stuff. So that's important to keep in mind relative to what we're doing. AMC, to me, this is just done. Like, I wouldn't touch this anymore. Arguably, you can say the same about GME, but this is still up here consolidating. AMC looks like it's ready to set in an inverted Adam and Eve M double top situation, and just needs a ton of time before anything can really happen with this. To me, it's likely that people, the smart ones anyway, are rotating out of AMC and into other stuff like GME, like BBBY, even though BBBY isn't necessarily bullish. It has these crazy spikes up and down on any given day that just look like there's a lot of people still paying attention to that. Moving to MSTR, it's actually looking like a bull flag here. So this may actually pull up to 807. And the question is, can we be bearish crypto if things like coin are bullish and MSTR is bullish, which is 80% or more at this point, BTC related? That's another weird correlation breakdown that doesn't really make too much sense. Something else that doesn't make sense to me is that these premiums are rising on GBTC and ETH, which is generally a sentiment gauge for legacy institutional involvement in crypto. So this should be bullish for price, and it hasn't really done anything for us yet. Tesla, which still probably holds a ton of crypto, also bull flagging here. Just rolling news about charging stations and batteries and blah, 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 blah over the past couple days. And this certainly looks like it wants higher highs. It looks like it broke this diag pretty substantially. Zoomed out long term, though, it still looks ready for massive retracement to me, mean reversion. So that's not really anything I'd touch. Square also tons of crypto holdings. They're going to have a quarterly report soonish, I imagine, as Q3 is here today. There was a threat of a 5200 crosshair, didn't happen. And it looks like it wants more. This is too range bound for me to jump into anything, but it looks better than it did, certainly. Again, they hold a lot of crypto or are involved in crypto in a big way. Silver, it's got to really bounce now, or this ascending triangle thing is in trouble. But this could take weeks to play out. Metals are notoriously slow, and this is gold, which also looks quickly bearish, which is unusual for gold to just spike so hard so quickly. Sure, it did that here, but this was March, right? This is what Corona looked like, and this is a couple days ago. Very similar situation here. And then on the SPX, it continues to just scream higher and higher and higher, and it's just tough to want to buy something like that when it looks like this. People are still crazy bullish on stocks, and my whole thing is that the cloud is telling you be careful, just like it's telling you to be careful here if you're trying to re-short anything, because just like it did here, the likelihood of mean reversion is extremely high. For BTC, that would be up. For SPX, it would be down in a big way on the weekly. Sometimes these are swift and violent. Sometimes we just kind of go sideways until we mean revert. You can see how it looked in March. But this isn't something you can get excited about. And you can say maybe these averages are out of whack because of March. Sure. But we are so overbought. We are so in fantasy land with all of stock prices right now. It's a tough short because stuff just keeps moving up, right? and if you're wrong, you just help it move up more by closing your short. So what do you even do? You either keep longing this till it breaks down, or you just do nothing until it does break down. NASDAQ as well. Looks like it's going to cross bearish eventually. That'd be my guess before it actually breaks down. That's really best case. If it can cross bearish like it did at the top or near the top before, this is 08 by the way, before all this stuff happens, that gives you plenty of time to get out, plenty of signal. For SPX in 08, it was kind of similar. You had this 03 to late 07 run, this cross, and then we just kind of fell off the table, right? We've been bullish really ever since then, except for Corona March. So now we see a GFC2, as they call it across the pond, global financial crisis, financial meltdown. I don't think we see anything on that scale, but we probably will see a pullback eventually, especially if they do raise rates sooner rather than later. Lastly, I'll mention the ETH-BTC fund I trade for Techemy Capital on Enzyme.finance, as well as the DeFi portfolio, non-custodial portfolio management, where you can send ETH or USDC or just watch what I'm doing. You can see AUM allocation, performance, deposit withdrawal history. You can see all the trades that I'm making. You can see that I'm mostly in Aave USDC here. I have limited yield capabilities at the moment, but Enzyme is continuing to add more and more stuff. Another risk on, risk off thing to watch is stablecoin APYs on borrowing and lending. If these borrowing and lending rates increase, that typically says there's risk appetite, risk on for certain things. Some of these are incentive based. That's also important to understand. Some of these are risk based. To see Synth USD at 24% APY gives you pause, right? Certainly when lending rates are this high, there's a reason. There's always a reason. Either it's people want to risk on, or there's just tons of risk with holding the underlying, period, end of story. So yeah, I have some limited yielding capabilities here. These are highly variable, so they go up and down all the time. But on the DeFi portfolio, we did decide yesterday to jump into some curve because the APYs were 10 to 15%. Balancer as well, the APYs were extremely high. The idea here being, even though these don't look the greatest chart-wise, that if this is near the bottom at an 80% drop from the top, that this play will eventually pay off, right, in the next couple weeks or month or two. So anyway, that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.